Time now for the markets with Leighton Spann, and the last crop and supply and demand reports are out for the year.
A lot of numbers, and we'll be talking a little bit about what they had to say in a moment. Also this week in the markets, the dollar hits an 11-month high. Slowing demand pinches cotton prices, while tighter feeder cattle supplies are expected. Grain and oilseed futures are trending higher as we record this program Thursday morning. This follows a week where a spike in the dollar crimped futures prices. Extension Ag economist John Michael Riley has been following this, as well as reviewing the December 9th government ag reports relative to corn and soybeans. John Michael, was this a fairly typical December report?
I think it's easy to say that. Not a lot. Typically in December, not a lot of changes come through. In fact, the only real big surprise was the soybean number, or the soybean numbers that were reported. The market was looking for the soybean ending stocks to be about 220 million bushels. It came in 230, so about 10 million higher. That really, was a negative aspect of the report. It pushed soybean prices down, but for the most part, there weren't a lot of wholesale changes across the board for corn or soybeans.
And I guess with corn, the global supplies continue to maybe even grow a little bit. It's definitely not shrinking. That's
correct. Again, domestically, no big changes, but they did report that China is expected to bump their production by 7.25 million metric tons, which is a change from the November report. So that, combined with the surprise to soybeans, pushed corn prices down when markets opened up after the report. Again, the shock to soybeans pushed those prices down. So we have come down from the prices did drop that day, and they've stayed about in that same range ever since.
All right, would you expect the price picture to stay about the same here as we approach the end of the year?
Yeah, I do believe so. We have seen the prices really take a fall off since the midsummer. Exports have come down from a banner year in 2010 for both of these crops. The dollar has strengthened over this time period, so we have seen those have resulted in weakening of prices, and I would expect that to continue as we move into 2012.
And I guess as we get closer to planning, once we cross into 2012, then that price picture may start to change a little bit.
Exactly. The current global economic uncertainty is always lingering out there, but yeah, what we're going to see as we move into planning is I wouldn't expect a whole lot of changes unless this becomes more dire.
Meanwhile, cotton futures showed muted reaction Thursday morning to the latest weekly U.S. export sales numbers. This even though the export numbers continue to run below average as far as upcoming USDA projections. Now at the market close on Wednesday, March settled in the red for the 5th time in 6 sessions. From a technical standpoint, some analysts believe the price move has reached an extreme and that a reversal for cotton, at least temporarily, may be just ahead. Analyst Virgil Robinson describes the action he might suggest.
It would be my best opinion those who have the opportunity here to go ahead and commit themselves to selling cash, because the basis is really strong. At least the way I track it, it's unusually strong. I'd take advantage of at least that strong demand signal, make a cash sale, and then replace it either with an option or some type of vertical call spread. I think leverage on your money is pretty significant here and a good opportunity in that regard.
And turning to forestry products, lumber production in this region and nationwide is stepping up a bit compared to a year ago. U.S. production through the month of September 2011 was up almost 9% from January through September of 2010. Here in the South, lumber production is reported to be up almost 9.5% compared to that same period a year ago. These numbers come from Random Lengths Woodwire. And we transition into our livestock segment with our weekly trivia quiz. And here it is. How many men's t-shirts can you make from one bale of cotton? Is the answer 566, or over 1,200, over 1,900, or over 2,400? I'll tell you in just a few more minutes. The Friday, December 16th Cattle on Feed report is expected to show a tighter supply as the year comes to a close. Private analyst Allendale Incorporated sees a decrease in placements against a very small increase for marketings. The McHenry, Illinois brokerage says it expects a tighter supply of both medium and heavyweight feeders to cancel out continued herd liquidation out in the southern plains. And in the pork sector of livestock, things are described as a little jittery around the hogs. Analyst Sue Martin suggests keeping an eye on China and taking a lesson from the U.S. poultry industry 1 year ago.
With the slowing economy in China, I think the trade is nervous about the hog market, and seasonally pork tends to soften a little bit here. The other thing that I think we need to watch is with the February losing to the April contract, that's another sign of a topping market here. I think producers need to be doing a little bit of hedging. Again, maybe buy puts underneath you. With a slowing economy, China may slow up at any time from their buying of U.S. pork. And we seen it a year ago in poultry when they all of a sudden they thought we were dumping too much poultry into them, and they switched to Brazil. They didn't change the amount that they were buying, they just changed origin. Well, this past week, the first load of pork came out of Brazil to China.
Our trivia answer is coming into view next on Farm Week. We were talking cotton in particular, and the correct answer is B. Over 1,200 men's T-shirts can be made from one bale of cotton.